Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, January 6, 2011. This morning I'm talking about climate change. And I'm not talking about the Al Gore, hocus pocus global warming, or what started out as global warming, then became global cooling, and then they just changed it to climate change. But I'm actually talking about what's going on in Washington, D.C. Just yesterday, we swore in a new Congress, all right, and it was based on the elections that happened back in November, which were landslide elections, which changed the political climate down in Washington. Now, part of the reason this was done is because last year's Congress was seen as very anti-business and business unfriendly. All right, they were concentrating on a lot of things that didn't really have much to do with the economy, and in fact, people might say that it actually harmed the economy, and that was bad for employment, which of course is the biggest problem plaguing the U.S. right now is high unemployment rates. So, all these new people were sent to Washington to try and work this out, and that's what we've been seeing recently. Is that it looks like there's been a bit of optimism in the markets, which have sort of broken down some of the normal correlations we might think about. Now, this week is all about jobs. Okay, we've had yesterday we got the ADP jobs change report. All right, and that came in almost 3 times better than the expectation. So that was a step in the right direction. That's very positive. This morning we got the initial jobless claims for last week, and it came in largely as expected. I think it came in a little bit less. It was 1,000 more than they were expecting. But we're back in the 400 range. Last week's reading was at 388,000, but it was revised to 391. So people were saying, hey, this is great, we're back in the 3s. Well, this week we're back in the 4s, but you got to remember that the last 2 weeks were basically holiday shortened weeks, with the Christmas holiday and New Year's, so perhaps they were an anomaly, and we shouldn't be thinking about the 300s just yet. Well, tomorrow's non-farm payrolls report, 8:30 a.m. That's the granddaddy of them all, and that's going to really show what the employment picture looks like here in the U.S. All right, as of right now, we're expecting to add 140,000 jobs, and we're expecting the unemployment rate to tick lower to 9.7% from the current 9.8%. So we're going to have to see what happens with that tomorrow. There's also in Canada employment figures are due out as well. So we're looking right here at Euro USD. All right, now the Euro's been weak as of late, based on dollar strength that's going on. Now we've been talking about dollar strength as a result of better than expected economic data here in the U.S., which is a little bit unusual here for the markets with the way that they've been trading, because we have this risk sentiment and these risk themes that the market trades on. When things are good, that means people are happy, they want to take on risk, they're searching for yield. Okay, but now we've got this idea that dollar strengthening as stocks are strengthening as well. So the morning started out with stocks higher, but as a result of some of these correlations starting to reassert themselves, all right, we actually have stocks lower. So we had stocks higher in Europe, they were higher in Asia overnight, and now stocks are lower here in the U.S. We've also got commodities lower. Okay, oil back under trading an 89 handle. Gold's a little bit lower as well. So we're looking at the euro here. It's pulled back on the daily chart, right? That's 50% retracement level. You can see that it briefly broke it earlier in December. Okay, I think this time it might be the time that it breaks down. So we're going to see a little bit of near-term support here at 130 even. Law of round numbers is going to kick in right there, but I think we're going to get a pullback to the 128 level on Euro USD. All right, just want to show you Aussie. All right, Aussie's lower. We're back under parity here with USD. All right, we've got the dollar versus loonie here. Let's just go to a shorter chart. We can look at it on the 30-minute. All right, we were trading with a stronger loonie there than the dollar. It looks like we're reapproaching this parity level, so we're going to have to see if that holds. All right. Lastly, let's take a look at pound. You can see pound here earlier. Let's look at this on the 5-minute chart, because I'll show you this. Again, the 5-minute chart right here, 4:30 a.m. All right, that was when the British PMI services reading came in, and came in lower than expected. So you can see how that sold off, but we do have some near-term support here at about 154.50. Just pull it out here a little bit and show it to you on the 2-hour chart. All right, so you can see that it's sort of put in a little bit of a bottom right there. Got some long wick candles holding this level. So, these risk themes that we talk about, sometimes they're working, sometimes they're not. We do get anomalies happening in the market. Just to show you one right here, you can look at the Kiwi. Look at the Kiwi. It's higher against just about everybody. All right, but you've got commodities lower, stocks lower now. So what gives there? Well, we talk about reallocation trades. Perhaps somebody's pouring into it. Whenever something unknown happens, and I can't find any news or reason why this would be higher, all right, just blame it on China. All right, they're probably divesting some of their currency holdings and moving in, using the opportunity of a down day to actually get some trading done. So, that's what we're looking at. You got to remember, folks, that markets are forward-looking, all right? And it's not so much what's happening today affecting today's trading, but, what's going on down the road. It's about the hope for tomorrow, and that's sort of what markets do. So right now, it appears that these risk themes are a little bit muddled. We're not sure, is it risk-taking if stocks are higher but commodities are lower? Is it risk aversion if the opposite occurs? Is it, if dollar strength's happening, is it risk aversion even though stocks are higher? So, we're going to have to keep an eye on these and see if these correlations come back into play or if they don't. But one thing that you can be certain of is that there will be some movement based on this. All right, if you understand how these correlations and things used to work, all right, sometimes you get what's called a reversion to mean trade, and that means that things are going to go back to the way they used to be. So, as the market sort of grapples with this new paradigm, if you will, okay, sometimes you'll see, all right, well, stocks are higher, but everything else looks lower. Maybe this is a clue to you that stocks are going to, start the day higher and then sell off, and that's exactly what we're seeing today. So even if you're not a Forex trader, which, by the way, you should be, but if you're not a Forex trader, you can use this market to sort of tell yourself and take clues from it as to how the other markets are going to perform. And that's what's going on in the world today. To be a really good investor and a really good trader, you have to have an idea of what's going on in the global macro economy. All right, whether it's interest rates, whether it's currency prices, whether it's stocks, yields, you name it. But it all starts with the Forex market, okay? Because that's the most basic market there is. Just you're talking about country's currency. So everything sort of is predicated upon that. So if you don't understand how this market works, all right, it's going to be more difficult for you to do better in your other investing, whether it's stocks, bonds, you name it. So that's what we're looking at today. If you haven't taken the opportunity to get involved in the Forex market, please contact us. We have great courses online that you can get involved with, and we're running promotions right now where you can actually get these courses for free. So that's what I've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.